Hi guys, this is Gettess with the Market Sense for the week of March 16th, 2010. The Market Sense is a fancy name for my weekly analysis. We'll be using Genesis Trade Navigator to provide all these charts for us that we're looking at. And I must tell you before we go look at charts that I'm doing this Tuesday night after the Fed meeting on Tuesday, and the markets are notorious for having sometimes a different reaction Wednesday morning than they had Tuesday afternoon after the Fed statement. So everything we talk about will be a little squirrely and tricky here because it could change in the first couple hours Wednesday. But looking at the Treasury bond market first, you can see that this week has rallied right up to the resistance area here between where the blue line and the red line meet. Let's call it the 117.24 area. Uh, so this is a make or break time. If they're serious and they seem to like what they got out of the Fed Tuesday, if they do mean that, then pretty clearly they're at least going to go test this double top here in the 118.02 area. And there's plenty of room for them to go if they want to go. We've got previous highs over here, way over 120. So anything's possible. It's also possible that they could turn back down from here and decide that that's all they've got for the week. If that's the case, it's possible that they've already made the low in the area of the green line there that you see. But we could also go down to either, I think that's 116.04 roughly is where the blue line is, or the 115.20 area. It all depends on how genuine their upside reaction is to the Fed. But they're at resistance now, and they certainly could break it. So yeah, it could be interesting here. In stocks, man, once they broke down after making this high back in early January, once they broke down to this purple level, we thought they'd go back and test the highs and eventually go to new highs. But the move up here lately has just been so relentless. It's kind of unbelievable. I really thought they'd have a reaction from this old high down into this area someplace before they rallied, but here we are at new highs. So they're sort of in a similar situation to the bond market in that we have resistance right in this area here. Let's call it 1155, 1157. Just sort of general. That's where the resistance is, which is, I would call that still relatively a marginal new high. They could still turn back down from there. If they don't, well, good luck. We've got a moon up there someplace that could be resistance, but other than that, they could just really rock and roll. What I'm really surprised at is you can see the last 3 weeks here have not traded down to that red line at all. And you would think they would do that this week. That's a 1131.50, I think, is where the red line is. The momentum to stay above that red line is just ridiculous. They can't stay that strong forever. So you would think we're going to see some sort of reaction back down at some point. But, gosh, new highs are new highs. You can't argue with the market that's making new highs, and there you go. So again, unless the reaction Wednesday morning is very different than their reaction Tuesday to the Fed, and we do have PPI and CPI both Wednesday and Thursday mornings that could change things rapidly. So we do have to keep that in mind. But that's all. That's all I can see at the moment. That we're at resistance in both markets. I hope you can find something profitable to do for the rest of the week. Thanks for checking in, and hopefully you'll have a chance to check us out next week. Thanks and good luck.